morning. Gavin, did you listen to what Haas was saying? She says that a lot of these markets in Southeast Asia, in fact, India itself, is getting a lot of foreign investor interest in dollars these days. What about the outlook? Is it as positive as investors have seen so far in 2010?
Oh, good morning. Our equity strategists do continue to believe that emerging markets are the place to be putting your money. And so, in large part, we do agree with what you say. And I think the reason for that is that we know there's all these liquidity sloshing around from the G4 central banks. But I think what has happened recently is that emerging market central banks have shown less willingness to tighten policy. And so now they're joining the G4 central banks. There's all this liquidity sloshing around, and ultimately it's going to go into equities, and most likely emerging market equities.
Emerging markets, equities. What about the rally that we saw on Wall Street on Friday? Some are saying that this indicates risk is back on. In fact, take a look at the gains for September. Asia, Europe, and even the U.S. looks pretty good so far.
You're exactly right. September has been a great month for equities, and that's quite unusual. September is normally a month when markets can go haywire on the downside. But I think the September rally, in large part, reflects the poor August. So in August, everyone was worried about the double-dip recession. Our economics team don't really believe in the double-dip recession. They believe Q4, Q6, those type of quarters after the recovery bottom tend to be a little bit soft, but it's a natural process. Markets tend to get a little bit anxious, but we ultimately believe the equity market is probably up and onward from here.
Okay, Gavin, so if investors should throw out the double dip scenario, what about this expectation of more quantitative easing, more stimulus being thrown at the global recovery? Is that too over-optimistic? Are they pricing in maybe too much right now?
I think the Fed has told us that they will come into the markets if needed. We don't necessarily believe the US economy is going to need further QE. But nonetheless, I think the markets are taking that as a positive step. So we've now converted the Greenspan put into the Bernanke put. And so I think the equity markets are responding to that. So I think the markets know that the downside is fairly limited and therefore they're piling in, and that's driving equities higher.
Okay, Gavin, what about this outperformance? I mean, how much longer do you think it'll last? What sort of news flow are you watching out for?
I think the economic data, not so much this week. The data releases this week are fairly light on the ground. Given that the path of least resistance is probably up at the moment, that's probably constructive for the markets. But I think going forward, we'll be looking at the economic data. Is the second half slowdown materialising? Is it a lot weaker than everyone is now expecting? Is the double-dip recession just over the hill? Those questions will obviously need to be answered. But at the moment, we remain fairly constructive on the US and hence the global economy.
Hey, Gavin, quickly, did you watch Wall Street Money Never Sleeps, the sequel yet?
No, unfortunately, I was flying back from London. I was on a plane, so maybe this weekend.
Yeah, I should go to the theaters and try to catch it. Thank you for that. Gavin Stacey of Barclays Capital.